Most people think investing is complicated or risky. The truth is, it isn't complexity that stops them. It's fear. Fear, not knowledge, keeps most people away from building real wealth. Millions never start investing. They watch other people's money grow in stocks, real estate, and businesses, while their own money sits idle in a savings account or loses value to inflation. Fear creates inaction. People imagine worst-case scenarios, replay stories of losses, and convince themselves that investing is too dangerous. But here is the truth. Fear is natural, but it can be managed. Knowledge, strategy, and small consistent steps can replace fear with confidence. This audiobook will show you why fear holds most people back, how the wealthy think differently about risk, how you can start investing safely even if you've never done it before. Remember this: if fear controls your money, it controls your life. If knowledge and strategy guide your investments, wealth becomes possible. By the end of this audiobook, you will understand investing in a clear, simple way, and fear will no longer stop you from building your financial future. Chapter 1. Understanding the fear. Fear of losing money is natural. Everyone feels it. It's part of being human. But here's the problem. Most fear is often irrational. Emotional fear is different from rational fear. Emotional fear comes from stories we hear, headlines we read, or personal experiences that scare us. It makes us imagine the worst-case scenario, even when it is very unlikely. Rational fear is based on facts and careful assessment. It helps us make smart choices, avoid mistakes, and plan properly. The danger is that fear prevents action, not failure. Most people never start investing because they are afraid. They imagine losing everything, so they do nothing. The truth is, doing nothing often costs more than taking calculated risks. Money loses value with inflation. Opportunities pass by while you wait. The rule is simple. Understand your fear. Separate emotion from facts. Let rational thinking guide your decisions. Remember, fear is normal. Not investing because of fear is optional. You can learn to control it and make fear work for you, not against you. Chapter 2. The cost of inaction. Avoiding investment is a risk, too. Many people think doing nothing is safe. They keep their money in a savings account or under the mattress, believing they are avoiding danger. But in reality, doing nothing has a hidden cost. Inflation slowly erodes the value of your savings. Money that sits idle loses purchasing power year after year. What feels safe today can be worth much less tomorrow. Missed opportunities to invest are lost forever. Compounding is the most powerful force in wealth creation. By not investing, you miss the chance for your money to grow exponentially over time. Comfort today can lead to poverty tomorrow. Choosing short-term safety over long-term growth keeps most people trapped in financial struggle. The rule is simple. Understand that inaction is risky. Even small, consistent investments are better than doing nothing. Start today, no matter how little, to benefit from compounding and growth. Remember, fear of loss keeps many people poor, but fear of doing nothing can cost even more. Chapter 3. Lack of knowledge creates paralysis. Ignorance is the root of most investing fear. Many people avoid investing because they feel they don't understand it. The world of stocks, real estate, and other investments seems complex and confusing. Complexity scares people. When something feels too complicated, the natural reaction is to freeze and do nothing. This paralysis keeps money from working for you. Understanding the basics reduces anxiety. You don't need to be an expert to start. Learning simple principles, like risk, diversification, and compounding, gives confidence to take action. Knowledge empowers action. The more you learn, the less fear controls you. Each small step builds understanding and courage. The rule is simple. Start learning. Break investing into simple, manageable pieces. Use knowledge to replace fear with confidence. Remember, fear thrives in ignorance. Action thrives in understanding. Chapter 4. Emotional bias and decision-making. Human emotions often sabotage investing. Fear and greed are powerful drivers. When markets drop, many panic and sell, locking in losses. When markets rise, greed tempts people to buy at the top, chasing short-term gains. Panic selling versus patience is the difference between losing and growing wealth. Investors who remain calm and patient see temporary drops as opportunities, not disasters. Overconfidence can also harm. Believing you know everything can lead to risky decisions without proper research. Recognizing and controlling biases is key. Emotions are natural, but you can prevent them from controlling your financial decisions. Pause before acting. Question your motives. Stick to your plan. The rule is simple. Be aware of your emotions. Make decisions based on strategy, not impulse. Train yourself to act rationally, even when the market feels chaotic. Remember, emotional mistakes cost more than market fluctuations. Control your mind, and your money will follow. Chapter 5. Short-term thinking kills. Long-term gains. The fear of short-term losses blocks long-term wealth. Most people react to small dips in the market. They panic, sell, and lock in losses. But market fluctuations are normal. Temporary drops do not mean failure. They are part of the investing journey. Compounding rewards, patience. Money invested today grows over years, even decades. Small gains repeated over time turn into massive wealth. Thinking decades, not days, changes everything. Short-term fear leads to poor decisions. Long-term perspective turns market swings into opportunities, not threats. The rule is simple. Focus on long-term results, not daily noise. Ignore temporary drops and trust the power of compounding. Invest with patience and let time work for you. Remember, short-term fear is the enemy of long-term wealth. Think long, act wisely, and wealth will follow. Chapter 6. The role of education. Learning is the antidote to fear. Most investing fear comes from not knowing what to do. The more you learn, the less intimidating investing becomes. Study before you invest. Take time to understand the basics of stocks, bonds, real estate, or other assets. Knowing how things work gives you control and confidence. Understand different asset classes. Each type of investment has its own rules, risks, and rewards. The more you know, the smarter your choices will be. Knowledge builds confidence. With education, fear shrinks and action becomes possible. You start making decisions based on facts, not imagination or panic. The rule is simple. Invest in learning before you invest money. Understand what you are buying. Confidence comes from knowledge, not luck. Remember, fear fades when understanding grows. Education is your first step toward fearless investing. Chapter 7. Risk versus recklessness. Calculated risk creates wealth. Blind risk destroys it. Most people fear investing because they confuse risk with danger. Risk is not the enemy. Ignorance is. Diversification and planning are essential. Spreading investments across different assets reduces danger and increases opportunity. A well-thought-out plan keeps you safe while still allowing growth. Evaluating downside versus upside is key. Before investing, ask yourself, what is the worst that can happen, and can I survive it? If the potential gain outweighs manageable loss, it is a calculated risk worth taking. The wealthy manage risk differently. They plan, they hedge, and they act decisively. They don't avoid risk, they control it. The rule is simple. Understand the difference between risk and recklessness. Plan, diversify, and evaluate outcomes. Take calculated risks, and you multiply your wealth safely. Remember, avoiding all risk can cost you more than taking smart risks. Fear fades when risk is managed intelligently. Chapter 8. Starting small, winning big. Fear shrinks when action is gradual. Most people never start investing because the first step feels too big. They imagine losing a lot of money and freeze. Begin with small investments. Even a small amount gives you experience, understanding, and confidence. The key is to start, no matter how little. Test, learn, and adjust. Investing is a skill, and skills improve with practice. Try different approaches, observe the results, and refine your strategy over time. Confidence grows with experience. Each small step reduces fear and builds courage. Soon, taking larger, smarter investments feels natural. The rule is simple. Start small. Learn as you go. Grow your confidence and your investments together. Remember, action beats fear. Even modest beginnings lead to big results over time. Chapter 9. The power of systems. Automated investing reduces emotional errors. Many people let fear control their decisions. They buy and sell based on news, panic, or hype, often losing money. Dollar-cost averaging is a powerful tool. By investing a fixed amount regularly, you buy more when prices are low and less when prices are high. This reduces risk and removes the stress of timing the market. Passive investment strategies also help. Index funds, ETFs, and automated portfolios allow your money to grow without constant decisions. You don't need to react to every market movement. Using tools to remove decision anxiety is key. Set up systems for recurring investments, rebalancing, and tracking progress. These systems keep you on track and prevent emotional mistakes. The rule is simple. Design systems to manage your investments. Automate where possible. Let strategy, not fear, guide your decisions. Remember, systems and automation make investing predictable and calm. Emotions no longer control your money. You do. Chapter 10. Learning from mistakes. Fear decreases when failure is reframed as learning. Most people fear investing because they worry about making mistakes. They avoid action to prevent loss. But this stops growth. Analyze errors instead of avoiding them. Every mistake teaches a lesson if you pay attention. Ask yourself, what went wrong? How can I improve next time? Lessons compound like money. Small insights learned from experience build over time, just like small investments grow through compounding. Each lesson makes your next decision smarter and safer. Resilience builds confidence. The more you learn from errors, the less fear controls you. You gain courage to take calculated risks and keep growing your wealth. The rule is simple. Don't fear mistakes. Learn from them. Treat every error as a stepping stone, not a setback. Confidence grows with experience, and fear fades. Remember, fear shrinks when learning grows. Investing is a journey. Mistakes are part of the path to mastery. Chapter 11. Surround yourself with knowledge. Mentors and communities reduce fear. Investing alone can feel overwhelming. Many people are scared because they have no guidance or support. Seek guidance from experienced investors. Learn from people who have been through the ups and downs. Their advice can save you time, money, and mistakes. Avoid echo chambers of doubt. Don't spend time with those who exaggerate risk or discourage action. Fear grows when you surround yourself with negativity. Collaboration accelerates learning. Joining groups, communities, or networking with investors exposes you to ideas, strategies, and perspectives you might never discover alone. Shared knowledge builds confidence faster than solo effort. The rule is simple. Find mentors and communities that teach and support. Learn from their experiences. Let their knowledge guide your first steps. Remember, fear shrinks when your circle of knowledge grows. You are never too small to learn from those who have gone before you. Chapter 12. Thinking like an investor, not a gambler. Rational thinking replaces fear with strategy. Most people approach investing like gambling. They react to rumors, follow trends blindly, and hope for quick wins. This behavior fuels fear and disappointment. Focus on probability, not speculation. Invest based on research, data, and likelihood of outcomes. Avoid chasing luck or reacting to hype. Align investments with goals. Every investment should serve a purpose, whether building retirement savings, generating passive income, or growing long-term wealth. Clarity of purpose reduces fear and increases confidence. Patience and discipline create consistent growth. Investors who think rationally understand that wealth accumulates over time. They stick to their plan, adjust when necessary, and avoid impulsive moves. The rule is simple. Think like an investor, not a gambler. Base decisions on facts, strategy, and goals. Let patience and discipline guide your actions. Remember, fear disappears when strategy replaces speculation. Rational thinking is your most powerful tool in investing. Fear stops most people from starting. It is the invisible barrier that keeps money from working for them. Fear makes people wait, hesitate, and do nothing. Knowledge, systems, and discipline overcome fear. By learning the basics, using structured strategies, and acting consistently, you can replace fear with confidence. Investing becomes a rational, predictable process, not a game of chance. Investing is about rational decisions, not emotions. Patience, planning, and long-term thinking turn fear into opportunity. Reality check. Most people will never build wealth because they let fear guide their money. Those who act wisely, even in small steps, become financially free. Fear is not the enemy. Inaction is. The rule is simple. Face your fear, start small, and act with knowledge. Step by step, you will gain control of your financial future. Fear keeps money in your bank account, but out of your future. The brave invest, the fearful wait. Learn. Start small. Stay consistent. Control fear, and your money and your life will grow. Invest wisely. Invest consistently. Let your money work, not your fear. Remember, fear is temporary. Action creates wealth. Start today, and your future self will thank you.